thank you for that presentation. That was excellent. You wouldn't believe it, but we have a proof of trust protocol that I'm going to tell you about as well. A little bit different, for sure. I beg for that. That's the true decentralist approach to that problem, by the way. Take notes. I want to help you, and I appreciate you trying to help us. Real quick aside, because I won't go down that rabbit hole, but our proof of trust protocol, there's something to that name because, as he accurately stated, the more centralized that investment becomes into the blockchain by investors and by state governments, the more we have to question proof of stake and proof of work. Our proof of trust protocol is a validation network. Everyone's so comfortable with this immutable ledger, but nobody wants to question a filter of what goes onto that immutable ledger. And so our proof of trust protocol is a network that affirms and validates transactions before they go live. And I'll get into that. But cheers to you, and you have our full support at iCash. So let me tell you a little bit of my background that she teased. I worked for 10 years in professional sports for the New England Patriots, 1997 to 2007. I realized pretty quickly that that was not a meritocracy. The owner had 4 sons, and none of whom I was going to marry. So I decided that that wasn't the best place for me to rise up to the ranks, and it's not one of the industries where you can go from the mailroom to becoming the owner. I started a management company, represent Tom Brady, Gisele Bündchen, Nelson Mandela estate, as she mentions. And what I started to realize was, as I built a family office for Tom Brady in the early 2000s, was that he had unique access to investments. Why was it that he, with no investment acumen, had access to the best deals? Out here in the Valley, there was a fund that you guys probably know about that Harris Barton did with Ronnie Lott and Joe Montana, where they aggregated access to some of the best investments and offered that up as a fund-to-funds product. Very smart idea. We replicated that and started something called Avenue Strategic Partners in partnership with President Clinton and his chief of staff, where we said, let's democratize access to the best hedge funds in the world. Let's roll up our collective reach into these people, aggregate them, and sell it as a package to Wall Street. We launched October of 2007. Who was around when that happened? It was the best of times and the worst of times. So built it into a successful business. I raised $250 million into that strategy and invested it across 12 to 15 different funds across the debt and credit cycle, which was interesting. I was then recruited to Goldman Sachs, where I managed the private capital of the partners at Goldman Sachs. So let's think about what that means. When you're a partner at Goldman Sachs, what's your life look like? You have a New York City apartment, you have a Hamptons house, you have 70% of your net worth in Goldman stock. Those are all correlated asset classes, right? So what I and my team did was try to find uncorrelated ways for them to invest their money that was more liquid and more diversified to get them away from that. God forbid something happens in New York. God forbid there's a crash in the financial markets. All of those assets trade together, right? And as we're seeing right now with crypto, and I think an important thing for everybody to focus on is crypto is an excellent uncorrelated asset class. If you look at graphs, which are widely available, I decided not to really pitch iCash today. I'm going to more just tell you about lessons I've learned from my career, and hopefully that's helpful to everybody involved. And tomorrow I'll do the pitch when it's supposed to be a pitch. So when you look at, like I was saying, those uncorrelated asset classes and ways people traditionally access and get exposure to them, they're trying to get diversity away from whatever their core holdings are. Crypto holdings have had zero correlation to anything going on in the markets. When you look at gold versus USD, they're almost inversely correlated one for one. USD goes up, gold goes down, and people arbitrage that all the time. So if you say to an investor from any walk of life, you can invest 1, 2, 3, 4% of your net worth into crypto, and it's uncorrelated with anything else in your life, that's pretty that's argument enough for them to want to be included and get interested in what you're doing. And I encourage that tact. Key ways that we're differentiating ourselves and trying to make ourselves more institutional are ways that I've learned from the subsequent business I did to Goldman Sachs. I was approached by someone from the World Bank in that seat who said, Goldman should be buying banks in Africa. Africa needs investment. Africa needs institutional quality leadership. And Africa has very hard to access financial markets. So for example, I bought a bank on the Botswanan Stock Exchange. The Botswana Stock Exchange trades 25 million USD volume a week. The London Stock Exchange trades $10 billion a day. So my previous business, what we did was we went to these local markets and these local exchanges, and we said to people whose the largesse of their net worth was tied up in their business that they had probably started and built, and said, I'll give you one share in my company in London for a share of your company in Botswana. I'm bringing liquidity to you, and I'm going to bring institutional ownership and management to your platform. Pretty good pitch, right? We bought 8 banks in less than a year, and as she referenced, took that public on the London Stock Exchange for $825 million. Lesson learned. Guess what happened the day that we listed? We traded down significantly. Why did that happen? Because I raised 92% of that money from people who gave me $15 to $25 million each. Those are big, clunky investments. I also gave African bank founders, all of a sudden, a fully liquid stock in London. What do you think they wanted to do immediately? Sell. What we all have to learn here as this movement matures is you can't do that. You need to build these businesses with as diverse of a shareholder base as possible, geographically, so that you're not tied to different movements in local markets, institutionally, so that you don't have one guy that all of a sudden is a forced seller and it drives your price down. So be very careful about people coming and offering you big checks. Try to diversify your shareholder bases, and I'm calling them shareholder. I'll give Gordon credit, but I'll save him time in his next presentation. He can walk up on stage and just say, you're all securities, get over it. Okay? You're all securities, get over it. If you can be a security token, which we are, we're doing a token security offering where we're doing everything as if we're a security. You have to be an accredited investor, just like my IPO. You have to come in and you have to KYC AML yourself. You have to give us all your information. But guess what? We're also giving you true utility immediately, God forbid. God forbid we actually have a platform where you can spend your iCash token immediately when you receive it. And the hybrid of that, I think, needs to be the future of this, where people decide to actually bring you real utility to the marketplace and operate as if they're a fully regulated security. Now, we can sit here and debate what's going to happen in Washington, D.C. I've had a bunch of interesting talks down there over the past year or so. What I anticipate will happen down there is they cannot regulate the businesses, especially internationally domiciled businesses and businesses that have already listed, if you will, but they can regulate the exchanges. So what happens when they come in and they say to an exchange, we can shut you down unless you only trade in security tokens. We can shut you down unless you only trade in businesses that adhere to these. Guess what's going to happen? Anything that snuck out the side door as a utility token is going like this, and anything that did things right and listed as a security token is going to go like that. So if you're here as a casual investor and you want a good tip, buy a security token, short utility token, call me in 5 years. You're going to be doing just fine. If you want to get a little more granular on that, let's talk about what is a security and what is a utility. And let's talk about why what you see here in this ICO, I promised myself I wouldn't use that word. What you see here in this token security offering landscape, which I encourage everyone to adopt, and our listing will be the first token security offering that there will be. What you're going to start to see is people who justify access to their platform with true utility. And I wrote down some statistics that I thought might be interesting for us. Amazon. So what would you say if Amazon came up today and said, we're not going to go public. We're not going to sell shares in our company. What we're going to do is sell you a token, and every holder of that token can be a Prime member. Now all of a sudden they don't have to sell any securities. Now all of a sudden they don't have to sell any equity, I should use as the word, right? Did you know that the market cap of Amazon is roughly $700 billion, and it has 482 million shareholders? You know how many users Amazon has? 350 million. So they almost have, and how many people do you know that own one share of Amazon? Only kids whose bar mitzvahs I went to. That's it. Most of the investors in these companies own 1%, 2%, 5%, right? So what's going to happen is these companies are going to start to realize that the way businesses trade today, they don't trade as a multiple of earnings as interestingly as a multiple of the utility that their service provides. Netflix, $115 million market cap, 118 million users. Google, $743 million market cap. Billion, thank you. That would be a good investment opportunity. 1.2 trillion users. 12 billion users, sorry. Okay, I need decimal points up here. And Facebook, $532 billion market cap, 2,200 billion Facebook users. 4 times as many users as their market cap. They have 3,000 shares tradable and 2,200 and 22. I'm sorry, I keep messing up my my decimals here as well. You're getting my gist. They have 4 times as many users as they do shareholders. Google has 2 times as many users as they do shareholders. So these businesses trade as a multiple of what their underlying utility is. So in 1940s, my grandfather worked on Wall Street. You know, he's a guy down, you know, the lowest job you could have on Wall Street. But when people bought stocks, the original securities, the original equities, what they got was participation in revenue flow and vote in the future movement of the business. Getting some nods here. What do you think the average dividend paid on an equity in 1950 was? 7%. The average dividend paid today is under 2%. I worked on the Facebook IPO at Goldman. What did Mark Zuckerberg do? He came out and he said, you know what? I want to sell equity, but I don't want to give you guys any say. And people internally were freaking out. What is this going to mean? What he did was he kept senior shares for himself. He said, you don't have any votes, but I'll give you equity. Right? This is all the same things that we're seeing. You're just seeing them in a different structure. Okay? So what I'm getting at here is companies like this have been finding ways to access the public markets without having to give a vote, having to give real equity participation, having to give you revenue participation year over year, and they're justifying that as R&D, they're justifying that. So we could sit here and there's a bunch of different people who could define securities this is what a security is, this is what a utility is, this is what an equity is. Don't worry about any of that stuff. We have all new definitions for it. At the end of the day, what you need to do is give people exposure to the future utility and the growing utility of your platform. So let me ask you this question too. Amazon has 482 million shares outstanding right now. How many shares outstanding will they have in 2 years? Nobody knows, because they could tomorrow decide to print more shares, just like the U.S. government could decide to print more USD. In these token offerings, in our token securities offering, we've created 1 billion tokens with fixed supply. And as long as we continue to drive demand, what's the potential appreciation for those going to do? As opposed to a traditional equity holding or securities holding that Wall Street is used to, when they can continue to print, continue to create. So these are just some speculative things that I'm happy to be helpful as a decentralist to others who are trying to push forward this movement, and happy to help you think through, but also things that I think you should really try to incorporate into how you're positioning yourself when you're talking to institutional investors and as we try to broaden this movement. Thank you.